Ladies and gentlemen, good morning and welcome to the Fiscal Philosophy YouTube channel. I consider myself to be a value investor. I do not presently own shares of Foot Locker, but I do want to cover the stock today because it's been a while. Last time I dug into this, it was a pretty fresh pick for Jeremy Financial Education. Believe he was calling it a buy. Don't remember what price that was at, but I can tell you Foot Locker has spent a good portion of the year above $40 per share and has also spent periods of time below $20 per share. That kind of volatility doesn't really frighten me if you know about some of the other companies I hold. So I'm going to get into some of the financials of Foot Locker, discuss, potential valuation, go over whether or not I plan on joining on this journey with you Foot Locker bulls, and I'll get into the whys and the why nots of that. But without much further ado, let's jump into some of these financials. So the first concern I would have had with Foot Locker would have been, well, it's the mall shoe store. How well could they really be doing? Isn't their revenue probably shrinking? And, granted, they aren't producing rapid growth by any means. They certainly are not, at least according to their revenue, a dying business by any means either. So this is better than what I would have expected, but revenue, of course, doesn't tell the whole story. It's just a small piece. If we jump to the bottom line and look at their earnings per share, well, this is concerning. Okay, so there have been peaks and valleys in the past, and that's fine. What we have here is the biggest swing I think I've ever seen in their highest high and their lowest low, which is a little disconcerting, as it does seem like it's just plummeting and the bottom is falling out of this earnings per share. Now, to look at the full picture, I'm taking a look at the free cash flow as well. And honestly, that's even more alarming because it seems like the last few quarters, they've been hemorrhaging cash for some reason. I implore you, if you're thinking about investing in this company, recognize this red flag and figure out why this is before you even consider purchasing one share. I have another slight bone to pick with them with regards to this dividend. They're paying out a pretty high dividend, and compared to their current earnings, it's a payout ratio that is definitely unsustainable, and it's doubly as bad because that they're hemorrhaging cash. So where's the money coming from to pay this dividend right now? I feel sort of similar about buybacks in recent quarters. I mean, yes, you could make the argument that, hey, the stock is so cheap right now that this is a great opportunity that will pay off for shareholders later if we get earnings back up. But at the same time, you're basically doing that with money that you don't really have. I mean, are we going to say it's a good idea to put share buybacks on the company credit card essentially at this point? So that's a little sus to me, but I'm maybe not quite as mad about this as I am about the dividend. One thing that came as sort of a surprise to me in light of all of the negative things I just pointed out is that the balance sheet doesn't seem all that bad here. In fact, we've got almost $35 in book value per share. Granted, you'd probably have to chop off about a third of this to make up for their goodwill and intangibles, but even still, that's more tangible book value than I really would have expected to see for a company like Foot Locker. Before we get into the analyst forecasts and DCF calculations, make sure that if you enjoyed the video to lower that like button into a vat of molten steel, and make sure to subscribe to the channel and hit the notification bell so you never miss another upload. Analysts seem heavily divided when it comes to Foot Locker stock, with some thinking it's as low as $11 in the next 12 months, with others giving it a high of $43, which it did achieve earlier this year. It was in the 40s for a large chunk of 2023. So that's not necessarily out of the question. But personally, I'd like to see what their actual cases are for their valuations before giving them too much merit. So basically, when I was running this DCF, I kind of wanted to run the scenario of, hey, let's say that we buy Foot Locker, right? And we're correct about there not being a substantial long-term decline in the business to the point where it, for example, would sharply drop or go to zero in the next 10 or 20 years. So what kind of return would you potentially make if you bought it and you were right? And granted, like, not stellar growth, okay? We have growth rates that are below long-term inflation for the EPS. We do give them credit for their tangible book value in this valuation. And then we assume they get back to an EPS level that the analysts predict they'll get to in 2025. It's not I don't think it's an all-time high on EPS or anything like that, but it is a somewhat reasonable level for for them being like a pretty reasonable multiple, like probably 9, 10, 11 times earnings, something like that. So we have that at $2.83, and this is also assuming, free cash flow, comes back to closely follow that as well. And we put in a discount rate of 40. This means if you end up right about this and they hit that 2025 number and over the long term average about that for their EPS with, again, below inflation average growth over that time. Yes, if you call this one correctly, you could potentially make some returns that would almost make Warren Buffett blush, okay? But the fact that it is so beefy almost leads me to believe that there is, almost too good to be true, right? But that's the thing. You don't have to call too many of these kind of things correctly in order to have a really tremendous effect on your portfolio. Now, if I was to get in on something like this, it would be the cigar buttiest of cigar butts. I'm not exactly comforted by the fact that, Foot Locker is, for all intents and purposes, it's the shoe store at the mall, okay? That doesn't really provide me with the sense of security that this is going to be great for the next decade or two. I can envision a world where, hey, their cash flow doesn't really come back and it stays, depressed for a long period of time, and they just kind of start the downward spiral. Maybe this is the start of the downward spiral. I don't know. I would need to have some kind of information about some potential positive catalysts that have a real chance of happening. And heck, maybe another pullback in the stock price. Certainly, looking at this now, seeing that they were under $20, I think they were at like 17 or maybe even 16.50 or something like close to that earlier this year, down from a higher point in the 40s. That may have been a really, really great entry point for people who could see it at that time. I myself, I'm not rushing in to make any moves on this at the moment. I already get a lot of flack for being a falling knife cigar butt investor because I pay such attention to valuation and don't always focus as much on growth. I think this is something where you have a potential, again, if you call it correctly, to make a good return in spite of a lack of growth, potentially. But the business needs to not decline, right? This just needs to be a bump in the road that they've experienced here this year. It needs to not be the new normal for them. And that's the big question, right? Flip a coin. Now, some analysts may have some more in-depth information on, what the future actually looks like, but considering they're so divided on the price forecast, I mean, it seems like it's just a matter of each individual's opinion there as to whether Foot Locker can, pull it back together essentially. So I personally, at this point, don't think I'm jumping in, but, I'm always open to new information. Let me know down below if maybe you got into Foot Locker at some point this year, your cost basis, and, what you think the future holds, especially over the next 5, 10, or, more years. If you made it this far, I'd like to thank you for watching the video. Remember to drop some comments down below and join us on Discord, link in the description. Always like to engage in a fruitful discussion on these investments and others like them. Take it easy, everyone. Have a wonderful day.